Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. It is the first stock picks video of the year 2024. So this is episode 46. And what we'll do as usual is go over the high-yield landscape in both the Canadian and American stock markets. Don't forget, if you're American, you only invest in the American stock market. You don't want to watch the Canadian part, use the YouTube chapters below to skip to the American part. So in case you're new to the channel, my name is Adrian. This is a monthly series where I review, and this is the channel specialty, of course, many of the most popular high yield income oriented funds on both the Canadian and the US stock markets, with a particular emphasis on covered call ETFs. There's so many of them right now, so many of them coming out that it's pretty much impossible to cover every single one. So I'll try to stick, and this is going forward, by the way, to the more diversified ones, and I'll only discuss really the more niche ones if there's anything new. So without further ado, episode 46, let's check out how the income oriented landscape has been doing in the last month. So before we get started, I'd like to thank the sponsor of this video, a good friend of the channel, Harvest ETFs, one of my personal favorite income-oriented covered call ETF managers in Canada. And by the way, they do have the Harvest Premium Yield Treasury ETF, which is the highest yielding US government bond covered call ETF in Canada, HPYT. And by the way, just dipped under $12, which means you could get a distribution yield or dividend yield of over 15% now, which is pretty incredible. So don't forget that they also have their all-in-one, where it's a combination of many Harvest covered call ETFs. This is the product, one of my favorite products, and I'm definitely invested in this one. As you all know, HDIF, the Harvest Diversified Monthly Income ETF, which by the way now includes a small percentage, 3.3% in HPYT. So this is a all-in-one which combines all the best Harvest covered call ETFs and uses a little bit of leverage. As you could see, very well diversified, and right now it does have a really nice yield still of over 10%. It has been going up, will probably keep going up as the stock market goes up. So now's a great time to get over 10% yield in this great diversified all-in-one covered call ETF. And if you don't want the leverage, don't forget they also have HRIF, which is the non-leveraged version. So how has the stock market been doing in the last month? Let's check it out super quick here. We look at the SPX, of course, which is the entire, or the S&P 500, which kind of represents or showcases the entire American stock market. By the way, I'm filming this on January the 10th, so the market's still going. It's pretty much up 3.23% in the last month. I think it's, pretty much a fresh record. The S&P 500, guys, is just hit its all-time record of 47.71. Not surprised. The S&P 500 is king, always will be, right? So stock market in American stock market's been doing really well in the last month. Same thing for the Canadian side. I mean, we're at just under 21,000 here, 21,000, the S&P TSX Composite Index. Not the all-time high, but I think it's really flirting with it, or almost pretty much getting there, right? The all-time high seems to be just under 22,000. So yeah, the story is the stock market's done really well. Both stock markets, obviously, that big 2023 crash and recession did not happen. This is why it's so useless to look at predictions. So let's take a look now at the Canadian landscape when it comes to some of the top high yield income oriented funds. Don't forget, if you're American, just use the YouTube chapters below to skip to the US market section. So HDIF we already covered. Of course, we're going to cover some of the top diversified funds, which I feel are great candidates to make, as your core positions if you're an income-oriented investor. So of course, you do have HDIF still chugging along. There's no real news on this one. Distribution rates have remained the same, a little over 10% now. Still a great time to pick it up. Still a good sector mix. A lot of this, a couple of the ETFs have taken a beating in the last year, so I do think it's a good time to pick this one up. You got the travel stocks, you got the US banks. They've already started recovering, but I think there's more recovery to go. And of course, don't forget, they do have the HPYT. I do have a small position separately myself, just because it's the highest yield US Treasury covered call ETF. But don't forget that it is a small position in HDIF as well. We do have some big news once again from Hamilton, HYLD and HDIV. little changes, and I expect a lot of changes coming up in the next couple of months, because as you all know, they are launching 4 yield maximizer ETFs, one for energy, one for basic materials, one for US banks, and their own healthcare one. So but I mean, they did update HYLD. You could see that they did remove USCC, QQCC, and they did add more to SMAX and QMAX. They still have the JEPI and JEPQ, although JEPQ they did reduce a little bit. They still have HHL, RYLD unfortunately, and of course the gold one and the energy one. But because they're launching their own energy ETF, their own gold producer materials ETF, and their own healthcare ETF, my guess is that they're going to be replacing these third-party ones here with their own ETFs, and hopefully also get rid of the US listed ones like JEPI, JEPQ, RYLD. They also added H bond, by the way. So they kind of did what Harvest did. They added a small position in H bond, which is Hamilton's US government treasury ETF, which I like. A little bit of diversification can't hurt. And they also did increase their distribution a tiny bit from 12 cents to 12.1 cents. But I do think that this is only the beginning, guys. Most probably they will keep increasing it in the next couple of months as they continue the changes. So stay tuned. I do have a planned Q&A with Hamilton ETFs. We'll talk all about this. There's going to be a lot to talk about this month. January, February, March, going to be a big month for Hamilton ETFs, guys. I think there's going to be, probably more dividend increases and a lot more changes coming to HYLD and HDIV as well, which has also increased the distribution a tiny bit from 14 cents to 14.1 cents. And they also starting to make changes. A couple of changes I've seen is they took out HUTS, the non-covered call version of UMAX. They did keep HFIN though, which is a non-covered call version kind of HMAX. So not sure if they're going to keep HFIN or not. Definitely not a covered call ETF, but maybe they'll keep it. And again, I'm sure this one's going to have a crap load of changes as well, because if they're going to make their own energy, have their own yield maximizer, energy ETF, gold ETF, healthcare ETF, they'll probably swap these out, right, for that. They also reduce a little bit the HTA, which is the Harvest Tech ETF, for their own QMAX, and I'm pretty sure eventually they'll swap it out eventually completely as well. So pretty exciting stuff coming from Hamilton here. Obviously, I think we kind of know what's happening. They're probably gonna make HYLD and HDIV completely in-house, only have their own ETFs in there, which is great for fees, and probably will be an increase of yield as well. Let's move on to Horizons ETFs, which has some fantastic diversified income-oriented ETFs. They have leveraged ones and non-leveraged ones. I'm going to focus more on the leveraged one. So USCL, which is pretty much S&P 500 with covered calls and a little bit of leverage. QQCL, the NASDAQ, same thing, but the NASDAQ. CNCL, same thing, but the Canadian market, the TSX 60. Then, of course, you have EQCL, which combines many Horizons covered call ETFs like the 3 we just saw, but it also has 2 growth ETFs, a little bit of emerging markets and a little bit of international outside of North America. So this is really a one-of-a-kind one-stop shop. I made a few videos on this, why I'm personally not going to be investing in it, but it could be a fantastic core position one-stop shop here. So there's really nothing too big besides discussing that the AUM keeps growing on these, but in terms of distributions, they've all held steady. 23 cents for USCL, QQCL still at 25 cents, CNCL didn't change as well, it's still at 20 cents, I believe, yeah, and EQCL just came out very, very recent and holding firm at 19.5 cents. So all very, very, very high yields. And great core positions. I absolutely love these ones. These are kind of, USCL, QQCL are pretty much the highest yielding Canadian covered call ETFs. They are leveraged, however, 25%. So awesome funds here. Not much to report on those. Same thing for Evolves, ESPX, and ETSX. So as we know, ESPX is literally S&P 500 with covered calls. No leverage on this one. Yield is about 8.5. And they did have a mistake with their latest press release with the distributions, by the way. It seemed like SPX would have, went to 16 cents instead of 15.5, but it was a mistake. So ESPX distribution has remained firm at 15.5 cents. And the ETSX one, which is a bit higher yield, 9.82 right now, is holding firm as well in terms of, distribution hasn't changed as well at 16 cents. Moving on now to Brompton. This is BMAX. BMAX is Brompton's all-in-one covered call ETF. Again, nothing really to report here. The distribution's holding firm at 10 cents here. another all-in-one solution. So I know there's a lot, guys. Oh yeah, last but not least, ZWQT from BMO, which is kind of BMO's all-in-one solution. It's just a combination of various BMO covered call ETFs. So this is going to be your lowest yielding one here at 6.59. The latest or the newest distribution for 2024 hasn't been declared yet, but they did declare a massive, it's 8.5 cents here per month, but they did have a phantom distribution of 19 cents, which leads me to believe maybe they are underpaying and maybe they will increase the distribution, but nothing yet for 2024. So we'll keep an eye on that in the next episode. So moving on, these are all, you got so many choices here. You got this one, you got all the ones I've pretty much covered so far. These are really good core diversified covered call ETF positions to build if you want to be an income investor in Canada. All great in their own way. It's really up to you to figure out which ones are the best, but these are very important funds which we will continue to keep an eye on every single month, and I'll let you know if there's any news on these. Bitcoin and Ether have been doing really well lately. These funds are growing. The distribution, we'll know in 5 or 6 days when Purpose announces their new distributions. But it did go from 4 cents to 4.75 cents, which was a great surprise. Even the Ethereum one, which, by the way, I'm filming this on the 10th, the Ether popped today, 6 or 7%, which is great. This one also went up. So we'll keep an eye on these. They are good candidates for distribution increases as Ether and Bitcoin go up, as the net asset value goes up. Plus, I'm assuming that volatility has been a little bit higher, which also helps covered call premium. So I'm hoping they will increase their distributions as well, but we'll have to wait and see. And we are expecting a Bitcoin ETF announcement by this afternoon, by the way, on the 10th. So by the time the video comes out, there'll definitely be a decision on that, hopefully. Moving on to closed-end funds and split funds. Now you have the Canoe EIT Income Fund. The NAV is not showing up right now. Not sure why. I refreshed it all the time, but it's usually trading at a small discount all the time. I did notice a small change that they actually have 1.62% in technology. So maybe they added a technology company, but I don't see it in the top 25 holdings yet. So Canoe, EIT is still EIT, right? Great, awesome fund, diversified, not only between sector, but also between Canada and US. Awesome track record here. Under 10% yield, however, at $13. It's over $13 now. Moving on to split funds here. So you have Brompton split funds. DGS now trading on par. DGS has recovered a bit lately as the Canadian market goes up. DGS will go up because that's pretty much what DGS does. It is, right, the overall Canadian market. And finally, they declared their distribution after like 7 or 8 or 9 months without a dividend. So will they keep paying it? Well, it depends on the unit NAV. As long as the unit NAV, by the way, if you click on it, you'll get the unit NAV, stays over $15.10, they will keep declaring the distribution. So still a great time to buy DGS. Let's say that you buy it now and DGS keeps paying, while you're booking a 23% yield, which is absolutely incredible. They did rename their Energy Split Corp, not my favorite split corporation. Not paying right now to ESP. They changed the symbol. GDV just passed 10% premium again. It's about 10% premium. Still not bad. Still pretty good. I've seen this at 20-30% premium. You still are getting a great 13% yield. LBS is actually under 10% premium, which is rare. So if you in the market for financials, I think financials are still undervalued in Canada. And the US as well. LBS could be a great option. Fantastic yield of over 15%. You see the stock price is $7.88. You could buy it. It's $7.88, but it's worth $7.35. So a little bit of premium, but still pretty good. LCS, PWI are still trading at small discounts. You could see here, right? They're worth, LCS, which is just the insurance companies, worth $6.65, but you could pick it up for $6.32. So if you really like insurance companies, you want that exposure, LCS could be a great option. And of course, you have PWI, which has been trading at a small discount for a while, and it still is. You could pick some up at $6.25 when it's really worth $6.44. So interesting options here. SBC, I would probably go with LBS instead because the premium is over 10% with SBC, but still some of the best split funds are by Brompton for sure. When it comes to middle field, ENS and RS, ENS is really a great pickup. The premium is really small. It's way under 10%. You see that you could pick it up for 1210, and the net asset value is 1153 RS. However, the real estate has recovered a lot lately. Of course, I've been buying up a lot of RS for a good reason. It makes sense, right? Real estate is really tied to interest rates, which there's speculation that eventually they're going to halt the interest rate hike. So RS has recovered greatly, but it's a little over 10% premium. Still a good pickup, I would say, because RS always trades at a premium anyway. And then you have some QuadraVest ones. I only cover really DFN, FTN, BK, but DFN, the latest update, end of December, over 1510, which is good. We'll see in about 6-7 days when they update it here. FTN also holding really strong, over 17, which is great. And then you have BK, which is the 6 banks at near $20. So no danger zone for that. So that is it for the overall, some of the most popular covered call ETFs and closed-end funds. And one piece of good news is that bank, the distribution increase in the press release is real. So this is the one that actually went up. It's now at 10 cents a month, which is fantastic. So it is rocking an enormous yield of over 16%. So it's, if you're in the market for Canadian financials, you got a lot of options. I did have a recent video about it, but bank is very, very high yield. It's the highest yielding covered call ETF. You have even LBS, which is 15% yield. You have BKCL from Horizons as well, which is in the 15 to 16% yield mark. So still a great time to pick up financials, guys. I think it's still the sector that's undervalued the most right now. So that is pretty much it for the Canadian market. Let's cover the US market now. All right, guys, moving on to the American stock market. We're always going to start once again with QYLD, RYLD, XYLD. But I have to say that I'm thinking of stopping to cover these because it's a rinse and repeat distribution policy that's set in stone. So I see really no value in this. I also think that these strategies are kind of outdated and obsolete compared to other great funds that we have now in the American stock market. Let me know if you have a problem with this, but I really don't see the need of covering QYLD, RYLD, XYLD. I mean, the distribution is always pretty much, it's set in stone. So you could always look at it yourself, right? They actually show the distribution here. So the key to understanding these is, if the premium is 2% or higher, you're pretty much going to get a 1% distribution, right? 1% approximately of the NAV, right? So if they would do it now, you would get an approximate distribution if the premium of QYLD is 2% or higher of 17.39 cents, right? If it's less than 2%, like in the last couple of months, you see it's 1.91, 1.89, you're not going to get 1%. You're actually going to get half of 1.91, which ends up being almost 1%, but not quite there, 0.95. So it's just a set in stone approach. I don't see why I have to show you guys this every time for QYLD, RYLD, and XYLD, but let me know if you have a problem with me stopping the coverage of these every single month. Another reason why I want to do it is because there's so many new funds and keep getting more and more now. I think I'm going to be very busy covering the American stock market because covered call ETFs are exploding on the American stock market. So I don't want to make these monthly pick videos over an hour every single month. So moving on to JEPI and JEPQ. So pretty impressed with JEPI's latest distribution, a little bit higher. I thought it would be lower because volatility is down, but hey, these guys obviously know what they're doing. 42 cents here. Still the biggest and most popular covered call ETF ever, right? JEPI. JEPQ, a little bit lower than last month at 39 cents. So they're both hovering about 9% yield. And I will start cover new competition from Goldman Sachs. So I do have planned to do a video on these. I have to say their website is absolutely atrocious. So in case you didn't know, Goldman Sachs launched competition towards JEPI and JEPQ. So you have this one here, GPIX, which is the S&P 500 one, which is obviously competing with JEPI. And you also have GPIC with a Q, which is the NASDAQ, which is obviously competing with JEPQ. So very, very, very similar strategy. Only two main differences as far as I could see. One, they have the entire S&P 500 and the entire NASDAQ, whereas JEPI and JEPQ does not. And two, they also have less fees. It's at 29 basis points instead of 35 basis points. But I have a feeling maybe this is a promotion and maybe it'll eventually go back to JEPI and JEPQ's 35 basis points. But if you actually if you do, they've only been out for a few months. These ones came out at the end of October. But if you actually do comparison, they are both outperforming GPIX is outperforming JEPI. and GPIC is outperforming JEPQ. So definitely got to keep an eye on these. Atrocious website. You can't even see the distribution yield. So I had to go to Nasdaq.com and plug them in here to see, if you just click on distribution history, dividend history, you will see it. So only 2 distributions and 8.5 here for the S&P 500 and 10.66 the latest one for GPIC. So very similar yields as well, and they're both outperforming the JP Morgan one. So these are definitely going to be on the list to track every single month, and probably another video coming up on these. By the way, I did reach out to Goldman Sachs because I want to interview them. I want to speak to the fund manager, but no response yet from them. Now moving on to the Defiance, QQQY, JPY, and the Russell, the IWMI. All 3 of them have declared lower distributions than the last month. I've been getting some questions, some emails about this. I am personally not worried. I think it's just part of the game. You got to expect varying distribution, guys. They're still very, very high yield in the 30s and 40s here, 32 for JEPI. Of course, S&P 500 is going to have a little bit less volatility than the NASDAQ. And even the Russell 2001, it went from $1.25 to $1. So, if the NAV keeps going down, like the yield max one, and what I think these ones are going to do as well, you could expect, lower distributions with time, but still very high. These are pretty much, I would consider them the yield max on the indexes, right? So I am personally not worried, but when I do get Jay Pesticelli back on the channel, which he agreed to come, I will ask him about, what is the distribution policy? How exactly the distribution works? How are they set? What is the decision that goes in? Are their premiums getting lower in the last couple of months? Is that why they've gone down? So stay tuned for that interview. I want to wait till the all-in-one yield max comes out first, and then I want to interview him about that and the Defiance ones as well. SPY Neo still holding. This has really been a really consistent one. Been very impressed with this one. It is, it's close, getting to that billion mark. Eventually it will, I'm pretty sure. This one you could expect about 1% yield a month. Very, very consistent. And I did get news from Neos that a NASDAQ one is coming out as well. So they've already filed the prospectus. So we'll definitely be adding that one to the list as well. I expect another video. Is it going to be called NDXI or what the name? I don't really know the name or the stock symbol yet, but most probably we're going to expect probably maybe a little bit more than 1% a month. So I'm very excited for the NASDAQ one to come out. Of course, we have moving on to the Simplify ones. SVOL, the absolute monster. Just destroying everybody, including outperforming the S&P 500, growing very rapidly here, almost at 600 million, very high yield of about between 15 and 16% yield. So we don't know what the new distribution amount is going to be for 2024. I expect it to be 30 cents. The last one of the year was a little bit higher, probably because they had a little bit of capital gains they need to pay out. Absolutely love SVOL. High as well is also kind of, think of it like a really low risk SVOL almost. They don't do any of that VIX shorting, but this is really a fantastic option if you want to hold cash, in my opinion. Very, very stable stock price with a really nice yield of between 9 and 10%. This one also, I think, had to have a little bit higher distribution. Yeah, a little over 20 cents. So I expect them to have the same distribution rates going forward here, 30 cents for SVOL and 20 cents for high, but we'll keep an eye on it. Yield max. So the all-in-one YMAX is not out yet, but the latest distributions, I keep getting very impressed. They're very, very high. Even the Apple and the Nvidia and the Amazon, Facebook, look at Facebook's latest, the yield max Meta one. Really high distributions. Look at some of them are over 100%, like Connie was, which is Coinbase, obviously makes sense. Very, very volatile stock. The Square one is really, really high. Look at AMD, 80%. This is crazy. Here's the Square. Here's Moderna. This, of course, was humongous, probably because it's the first one. There's another one, the AI company here. But I'm very excited for YMAX, and I'm curious to know, are they just going to do equal weight for all of them? We'll have to wait and see. So that's it for the yield max ones. Moving on to more the fixed income stuff. Now you have TLTW, LQDW, and HYGW. You guys know the deal. You got government bonds, investment grade corporate bonds, and just regular high yield corporate bonds. This one is the one that's performing best, by the way, HYGW. And all 3 of them, by the way, have declared a really big distribution for end of year, especially, I think it was LQDW was pretty big here, right? 61 cents. This one was 50 something cents. What was it? Very impressive, 54 cents. But check out TLTW, guys. It was a massive 74 cents, which is absolutely huge because it's even at the lowest stock price. So these ones are, they just do a rinse and repeat strategy as well. But this one is definitely the one outperforming out of all three, the one doing the best. And I think it will continue to be that way. But another competitor, something you should consider if, because these are really kind of fixed income bond replacements. If you want to have a little bit of bonds in your portfolio, or high yield income investor like myself, these are great because they do covered calls. But AGGH, it's terrible, a stock symbol, what can I say? AGGH, it simplifies bond solution. So I also been getting a couple of emails about this. I did talk about it with Shailesh and Simplify ETFs in the latest Q&A. I strongly suggest you check it out. But I actually did a performance comparison in AGGH, which you could kind of consider, kind of like a TLTW, LQDW, and HYGW all together. It's beating TLTW, it's beating LQDW, but it's slightly underperforming HYGW. But this would be a good ETF if you're a high yield income investor that wants to add bonds, right? You're looking to create a core bond exposure. And I strongly suggest to watch this video where this lady here goes through exactly how AGGH works, but it's basically a smart way to hold fixed income or bonds. And it's growing really rapidly, very nice yield of about 11%, 10 to 11%. And it also has been added as a fairly significant position, not too significant, in SVOL. You see that here, it's 18% of SVOL as well. I will always prefer SVOL over anything, but hey, if you want a pure bond exposure, we're getting more and more options. You not only have the BlackRock ETFs here, but you also have AGGH from Simplify. They also have Maxi, which has done extremely well this year, of course, because Bitcoin's been going up. This one, I love this one because it's pretty much Bitcoin exposure with the same strategy High does. Again, listen to that interview, the latest video with Simplify. We also talk about Maxi. I absolutely love this one. I have this one in my Lira, in my RSP on Drip, and it's pretty much like, they do the same thing High does, which is where is it here? Selling here short dated put and or call spreads on a variety of equity and fixed income instruments, which is a very low risk, easy way to generate like a 9% yield. But that's what they do with the cash. And then they also buy Bitcoin futures. So it's a really, really genius if you ask me. I absolutely love it. And they declared an absolute, you could see that they're doing it on the S&P 500 and TLT. So very, very conservative here. A monster, $4.17 distribution. I got it. And it was just, I got a crap load of units because it was on Drip. So this is probably because of all the capital gains backlogged during the year. But we'll see what happens, but it should probably go back to 15 cents a month. But like I asked Shailesh, what if Bitcoin doubles? Well, he said that the distribution could go up because they'll have a lot more cash to play around with. So really, really cool. If you're American, you want to invest in Bitcoin, you're a bit pessimistic, you're an income investor, Maxi is the perfect solution. Last but definitely not least, let's move on, finish off quickly with the closed-end funds. You have CLM, which is under 10% premium, so a pretty good pickup if you like CLM. And of course, you got to make sure you know how it works. Watch my last CLM video. This is a great fund. If you could drip it in the American, if you're American, you could drip it at NAV. If your broker does it, CLM is great. You have YYY, no, all-in-one closed-end fund solution, which is an ETF. No changes here. My personal all-in-one closed-end fund solution is RIV. I own this one. It's on Drip, still trading at a really nice discount of over 8%. The distribution was just reset for 2024, slightly higher than last year because the NAV actually, RIV, as you could see from the stock chart, it is starting to go back up, and I expect it to have a really good 2024, 2025 once fixed income recovers. Don't forget, guys, the closed-end fund market's like mostly all fixed income. That's why it got killed in 2022 to 2023, but 2024 should be the year of fixed income, I think. And I will mention FEPI. This is more of a niche fund. I don't think I'm going to mention it every month, but it's pretty impressive. It has a really, really high, nice yield of about 25%. Two distributions have been declared, one at $1.15, one at $1.18. So you're looking at about 25% yield, and it just holds 15 of the best technology stocks on the NASDAQ. You could actually see them. You could see them somewhere, but I guess we will. I don't know where it is around. Oh, here, there. So of course you're going to have a lot of the big cap technology names. Amazon and Netflix and Google and Salesforce, Microsoft, Apple are all going to be there. And they do out of the money calls. So this is actually a great covered call ETF on the American stock market finally, right? Because typically they only have index-based ones, but now they actually have more and more of these sector-specific ones. So this is a really good one if you want technology. What I like about it a lot is that the management fee is actually not that high. It's 65 basis points, if you compare it to Yield Max or Defiance at 99 basis points. So that is pretty much a big deal, and they just holds 15 technology stocks and do out of the money call. So very, very cool ETF. If you like technology and you're an income investor, you have a great option now on the American stock market. Now this is why I said I'm going to be probably very busy on the American stock market. There's an explosion of covered call ETFs. You have Curve, which is covered call ETFs, very, very, very similar to Yield Max on single stocks. And I'm happy to report that I am in contact with Curve. We're trying to figure out a time to set up a Q&A. So I want to ask them all about these ETFs and how they compare to Yield Max. And there's also another daily options one that just came out from ProShares, I Spy, which is actually daily call options. So this would be comparable really to a JEPY, except instead of put options, they're doing actual call options. First distribution hasn't been declared yet, but I think this is definitely going to be tough competition for a JEPY just because, it has a lot less management fee. So definitely keep an eye on this one for sure, because it's an S&P 500 and that's going to be, what could be considered a good core position. So we'll definitely add this one to the mix. So that's it for the overview of the American stock market. I don't really know what I'm going to do, guys, because there's more and more ETFs that are going to come out. So I'm going to have to figure out to go quicker, and I'm going to have to exclude the more niche funds, or else the video is just going to become 2 hours. So I'll, of course, try to keep my eye on everything and let you know if there's any big news for any of the niche funds, but this is still going to be your #1 source for income-oriented investing. Don't worry about that. So see you next, everyone. We're going to do this again in a month, the exact same thing, review everything one more time. Take care. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.